Hi, in this video we will solve example sums for preparation of cash book. Cash book is a subsidiary book, and along with the journal, both subsidiary books as well as journal are considered book of original entry. When we are asked to prepare the cash book along with the journal, what we will do is we will put all the cash entries in the cash book and we will pass journal entries for all the non-cash transactions. So in this video, we will solve example sums where we need to prepare the cash book along with passing journal entries for the non-cash transactions. So let's go to the first example sum. First example sum. Greenex Limited offered 1 lakh shares of rupees 10 each for subscription on the following terms. Rupees 3 to be paid on application, rupees 3 to be paid on allotment, and rupees 4 to be paid 2 months after allotment. Applications were received for 90,000 shares and the allotment was made on 1st May 2020. All the money due on allotment was received by 15th May 2020. Call was duly made, but a shareholder of 1,500 shares did not pay the call. We are asked to pass entries in the cash book as well as in the journal of the company. So we need to prepare the cash book and also the journal. So our approach would be to pass the cash entries in the cash book and the non-cash transactions in the journal. Before we proceed further, let's prepare a few notes. Issued capital, it's 1 lakh shares of rupees 10 each. Subscribed capital, or the number of shares allotted, it's under subscription of shares. Number of shares allotted is 90,000 shares of rupees 10 each. Issue price of the share, it's issue at par, and therefore the issue price is rupees 10. We'll write the breakup. Application, rupees 3. Allotment, 3 rupees. And the final call, 4 rupees. Total issue price is rupee 10. It says the applications were received for 90,000 shares and the allotment was made on 1st May 2020. So 01/05/2020 is date of allotment. And the receipt of allotment money is 15th May 2020. Also, we are given information that the call was made 2 months after the allotment. So the date of the making the call due is 1st July 2020, 2 months after 1st May 2020. Further, the question also says that we did not receive the final call money on 1,500 shares. So let's make a note of that. We did not receive the final call money on 1500 shares. Now let's go ahead with the solution. Solution. In the books of Greenex Limited. Cash book. Since we are going to record only the bank transactions, I will write here bank column only. The left side, debit side, right side, credit side. We have date, particulars, a rupee column, and again date, particulars, and a rupee column. Next is the journal. We have date, particulars, LF number, debit rupees, and credit rupees. Now the very first transaction is for application money received, journal entry, bank to share application account, the date of receipt of application money not given. So remember, it's a cash transaction. So to share application account, the amount is 90,000 shares multiplied by rupees 3 per share. Amount 2,70,000 rupees. The next entry is on the date of the allotment of shares when the application money has to be transferred to share capital. It's a non-cash transaction. So the date of the allotment, 1st May 2020, share application account debit to share capital account. Application money transferred to share capital account. The amount is the amount of application money which has been received, 2,70,000 rupees. Next entry is to make the allotment money due. Same date, 1st May 2020, share allotment account debit to share capital account. For allotment money due, amount 90,000 shares multiplied by rupees 3 per share, 2,70,000 rupees. The next entry is for receipt of allotment money. It is a cash transaction. The date of receipt of allotment money is 15th May 2020. Bank account debit to share allotment account. The full amount due has been received, 2,70,000 rupees. Next, we will go on to make the final call money due. The amount was made due on 1st July, 2 months after making the allotment money due. Share first and final call account debit to share capital account. Share first call money due. The amount due 90,000 shares multiplied by rupee 4 per share, 3,60,000 rupees. The next entry is for receipt of the final call money. So to share first and final call. Out of 90,000 shares, we did not receive the final call money for 1,500 shares. So the amount received is 88,500 shares multiplied by rupee 4 per share. That comes up to 3,54,000. The entries are done. Let's balance the cash book. Greater total on the debit side 8,94,000. By balance carried down 8,94,000. We've completed the solution. I will remove the split and we can view the answer together. This is the cash book at the top half of the screen. Followed by the journal. Let's go to the second example sum. Example sum 2. Eastern Company Limited, having an authorized capital of rupees 10 lakh divided into shares of rupees 10 each, issued 50,000 shares at a premium of rupees 3 per share, payable as follows: rupees 3 on application, rupees 5 on allotment including premium, rupees 3 on first call due 3 months after allotment, and the balance as and when required. Applications were received for 60,000 shares and the directors allotted the shares as follows. In the first category, applicants for 40,000 shares received in full. Category 2, applicants for 15,000 shares received an allotment of 8,000 shares. Category 3, applicants for 5,000 shares received 2,000 shares in allotment, excess money being returned. All amounts due on allotment were received. The first call was made and the money was received except on 100 shares. Give journal and cash book entries to record these transactions of the company. So we find that the second call has not yet been made. The company has made call only up to the first call, and the first call money was received except for money on 100 shares. So we'll begin by doing the first working note. Working note 1. We'll write the breakup at the side. Application is 3 rupees. Allotment rupees 5 including premium of rupees 3. So it's 2 plus 3. First call is rupees 3. The amount is 8 plus 3 called up. We'll complete the table. Category, number of shares applied, number of shares allotted, application, money received, application, money transferred, to share capital, refund, allotment, money due, excess application, to allotment, and the last column, bank to allotment. In the first category, applicants for 40,000 shares received in full. So number of shares applied for is 40,000 shares and the number of shares allotted is also 40,000 shares. In the second category, applicants for 15,000 shares received an allotment of 80,000 shares. So against number of shares applied 15,000, number of shares allotted in the second category is 8,000 shares. And the final category, applicants for 5,000 shares received 2,000 shares on allotment. So let's check out the total. The total of the number of shares applied column comes up to 60,000 shares, which matches with what is given in the question. The applicants were received for 60,000 shares and the number of shares allotted, the total is 50,000 shares, and it matches with the question that the company Eastern Limited has issued 50,000 shares. We'll go on to complete the table. We'll start with the first category, application money received. 40,000 shares applied multiplied by 3 rupees per share, 1,20,000 rupees. Application money transferred to share capital, 40,000 shares allotted multiplied by 3 rupees per share, 1,20,000 rupees. Again, there will be no refund. The allotment money due, 40,000 shares allotted multiplied by allotment money of 5 rupees per share, 2 lakh rupees. There is no excess application that can be transferred to allotment, and therefore the bank to allotment amount is 2 lakh rupees. We'll move on to the second category. Application money received, 15,000 shares applied for multiplied by 3 rupees per share is rupees 45,000. Application money transferred to share capital, 8,000 shares allotted multiplied by 3 rupees per share, 24,000 rupees. We'll come back to the refund column. Allotment money due, 8,000 shares allotted multiplied by 5 rupees per share due on allotment, 40,000 rupees. Excess application that can be transferred to allotment is application money received 45,000 minus the amount which is transferred to share capital 24,000. So the difference is 21,000 rupees. And therefore the bank to allotment figure is 40,000 rupees minus 21,000 rupees, which is 19,000 rupees. So there is no amount which can come under refund in the second category. We'll move on to the third category. Application money received, 5,000 shares applied multiplied by 3 rupees per share is 15,000 rupees. Application money transferred to share capital, 2,000 shares allotted multiplied by 3 rupees per share, 6,000 rupees. As per the question, in the third category, excess money is to be returned. So the excess money being 9,000 rupees, 15,000 minus 6,000 rupees, 9,000 rupees will be refunded. Allotment money due, 2,000 shares allotted multiplied by 5 rupees per share, 10,000 rupees. Excess application to allotment is nil and bank to allotment figure is 10,000 rupees. The total of application money received column, 1,80,000 rupees. The total of application money transferred to share capital column, 1,50,000 rupees. The total of the refund column is 9,000 rupees. The total of the allotment money due column is 2,50,000 rupees. Total of the excess application money transferred to allotment column, 21,000 rupees. And the total of the bank to allotment column, the last column, is 2,29,000 rupees. As per the problem, the first call was made and the money was received except on 100 shares. So we need to note down that for 100 shares, we did not receive the first call money. And the company has called up only up to the first call, which is 8 plus 3 rupees premium. So we'll go ahead with the solution. We need to prepare the cash book and enter the non-cash transactions in the journal. Solution. In the books of Eastern Limited, cash book, we will be doing the bank column only. The left side debit side, right side credit side. We have date, particulars, a rupee column, and again date, particulars, and a rupee column. Below we have the journal, date / serial number, particulars, LF number, debit rupees, and credit rupees. The first entry is for receipt of the application money. So, to share application, account, the amount is the total of the fourth column, 1,80,000 rupees. In the second entry, we will utilize the application money. Share application account debit. To share capital account. To share allotment account. Against share capital account, we will write the amount of the fifth column, 1,50,000 rupees. And again, share allotment account, we will write the total of the eighth column, the excess application which is transferred to allotment, amount 21,000 rupees. And the total, again share application account, 1,71,000 rupees. The amount refunded, it's a cash transaction and therefore it has to be entered in the cash book. So its journal entry is share application account debit to bank. So on the credit side of the cash book, by share application account. For the amount refunded, which is the amount of the sixth column, 9,000 rupees. Narration, share application money utilized. Next entry, we'll make the share allotment money due. Share allotment account debit to share capital account to securities premium reserve account for the share allotment money including premium due. The total amount, again share allotment account, 50,000 shares multiplied by rupees 5 per share, 2,50,000 rupees. The amount, again share capital account, 50,000 shares multiplied by the allotment money towards share capital, which is rupees 2 per share, 1 lakh rupees. And against security premium reserve, 50,000 shares multiplied by rupee 3 per share. The amount of allotment money towards security premium reserve comes up to 1,50,000 rupees. The next entry is for receipt of the share allotment money, which is a cash transaction. So to share allotment account, the entire amount due on allotment has been received, and this amount will be the total of the last and final column, the ninth column, bank to allotment. So that's 2,29,000 rupees. The next entry is to make the share first call money due. Share first call account debit to share capital account. For share first call money due, amount due on 50,000 shares at the rate of rupees 3 per share, 1,50,000 rupees. The next entry is for receipt of the share first call money to share first call account. Out of 50,000 shares, we did not receive the first call money on 100 shares. So it's 49,900 shares multiplied by rupees 3 per share. Comes up to 1,49,700 rupees. So the second call has not been made. The company has made only up to the first call. So the entries are done. We will balance the cash book. $5,58,700 greater total on the debit side. By balance carried down. 5,58,700 minus 9,000 rupees, which is 5,49,700 rupees. So we completed the solution. I will remove the split and we can view the full answer. So we have the table at the top followed by the cash book. And this is the journal.